You're listening to another episode of the Young Investors Podcast, so sit back and relax as myself, Brandon, and my buddy Hamish discuss the latest in the world of finance and stock market investing. Now, a quick reminder before we get into the podcast is that nothing in this podcast should be taken on as personal financial advice. If you're ever unsure about your finances or investing and you need some help, make sure you reach out to a qualified financial advisor. But with all that said, let's get into another episode of the Young Investors Podcast. Hey guys, welcome back. Joined as always by Hamish Hodder. Hamish, what's going on?
Not a lot. This is take two. Brandon tried to...
Stuffed it up. Stuffed up our first take.
Didn't have his headphones on. We did the first 10 seconds of this podcast.
Yeah. I was just watching my waveform and I'd finished talking and you started talking.
And it was still moving.
And the waveform didn't stop.
And
that's a sign that something's not right.
Something is not right.
Yeah. Apologies. That's all right. Only delayed us by about a minute.
Now we're
anyway,
off
how you doing? How's things in Melbourne? You enjoying your newfound freedoms?
Yeah, it's going well. Yeah, we've had a really good past, I think 12 or 13 days now where we have had 0 cases.
Yeah.
So it's been.
Well, I mean,
I
was going to say, if you can keep 0 cases for like another week or so, then surely that, fingers crossed, might be it, right?
Yeah.
Because I mean, the virus can't stay active for, I think, how many
like
weeks?
2 weeks,
2 or 3 weeks,
like that?
something like that.
Yeah, you would imagine so. Like that, we're relatively close to maybe not seeing a local case or a community transmission case for quite some time, which is really good. It happened really quickly as well. I felt like there was a while where things weren't really getting too much better. They kind of stayed around the 10 cases for not that long, maybe like a week, and people started to get a little bit itchy. A lot of people saying that we're never going to see it at 0. But then it kind of just happened. So, yeah.
It's fantastic.
Yeah, it's good.
Good on you, Victorians. Well done.
Woohoo.
I applaud you. That's good. So good. I mean, I know it's been very difficult, but it's so good just watching that, people have obeyed the rules and, it's worked.
Yeah.
I mean, I saw a statistic. I don't know. Did I say this last podcast or did I say it to someone else? I can't remember. It was like a statistic where in like July, there was like cases per day, new cases per day. And it was like France, 700, Germany, 700, UK, 600, Victoria, 700. And then it was like new cases now. And it's like France, like 21,000, Germany, some thousand. And then it's Victoria, 0. It's like, that's fantastic. It's actually worked.
Yeah, it's been really rough and quite strict for a long time, but it clearly worked. There's no doubt about it that the combination, maybe there's certain things like the masks were better than other initiatives, but clearly the combination of initiatives that they did worked. So very, very,
definitely
very happy. And hopefully, hopefully we see some more easing. We still can only have, I think, 2 people over in the home. So most of the restrictions are kind of outward. You can gather outside with more people. You can go to bars, outside areas and that sort of thing. So, but yeah, you would imagine that if...
I was surprised you're drastically less likely to catch some sort of, infectious disease if you're outside as opposed to inside. It's like crazy. If you're like, that's why they're encouraging restaurants to just seat more people outside. Yeah. Because it's just like, it's off the charts. You're so much less likely to catch something if you're sitting outside than if you're sitting inside. That blew my mind when I saw that chart. It's like really like night and day. It's crazy. But anyway.
I mean, it kind of makes sense, right? Like if you're in a closed space, like you would definitely be breathing in and out the same air.
That recirculating air.
Yeah, so I'm sure that makes a significant impact. But
just blow it away instead. Anyway, welcome to the Coronavirus Podcast, brought to you by Brandon and Hamish. What are we talking about today? We've got to talk about the US election. We've got some updates, obviously, there, which is very interesting. You're going to be talking about the vaccines. Yeah, some vaccines. There's some big news about the vaccines over in the States.
Big news, yeah.
Warren Buffett news today as well, which is good. We've got to talk about as well a little issue that's going on in the finance YouTube finance community even.
Oh no, what have we done? What have we done?
Well, we haven't done anything because we're decent human beings. But But there's some questionable stuff going on, but we'll get to that a little bit later.
Definitely.
But anyway, should we get stuck into it?
Yes. So today's episode is sponsored by Sharesight. And Sharesight is an application that you can use to track the performance of your stock portfolio. And it will help you keep track of all of the different types of gains that you generate when you're investing in stocks. So things such as capital gains, dividends. If you have dividend reinvestment plans, it will do all of those calculations for you. That's something that's really challenging to do on your own in a spreadsheet. So to be able to just automatically figure out exactly what return you're getting on reinvested dividends is a huge bonus for a lot of people. Currency gains, if you're buying shares internationally or you hold foreign currencies, currency gains have a significant impact on your returns, and most people kind of just ignore them. I looked at some of the shares that I was investing in back in March, and back in March, the US Australian dollar has seen negative 12% on US companies that I bought in March. So that's a significant impact that you need to be tracking. So it will do all of that for you. And then the main reason why I use it is when it comes to tax time. So Sharesight will generate up to 10 different reports that can be easily used at tax time to work out things such as your capital gains, your dividend income, and more. And at the moment, you can try Sharesight for free by heading over to sharesight.com/young investors. That's site spelled SIGHT, sharesight.com/young investors. So you can sign up to a free plan using that link. But if you want to sign up to a paid plan with more features, you can also use that link to get 4 months free when you sign up to a yearly subscription. So go check it out if you're interested.
Yeah. It's actually, the thing about I worry that our sponsored segment is just going to lose its impact over time, but it's actually really, like, Sharesight is actually really handy at solving all the issues that I actually struggle with at tax time.
Yeah, it's I'm surprised by how many people who have like their own kind of Google Sheets spreadsheet of their portfolio. I just never did that because I was just on Sharesight so quickly, and there's really no need to if you have something like Sharesight.
Yeah. I always, I'm bad. I always leave things to the last minute. So it's like the tax time comes and I'm trying to figure all this crap out. But to be honest, it's always the, capital gains and the currency conversions. That's the stuff that just gets you because you have to look up the specific days of the exchange rates when you bought and sold. And it's just so messy. So anyway, yes, Sharesight, definitely check it out. Like if you are someone that wants a way around those issues, definitely check it out. So US election, hey? US election.
Yeah, so
well done, Joe Biden.
Yeah, at the last podcast, we weren't quite sure yet. There was still what states were there? Pennsylvania, Georgia,
Arizona,
Nevada.
Arizona was going blue, but it was like Nevada was
very close. There was a number of states that were very, very close. So,
North Carolina.
Yes, yeah. So at that point, we really didn't know. Although it looked like it was going to lean Biden. He was gaining in a lot of those states, and now it looks like he's done it. Yeah.
It does. Basically, every media outlet on the planet has called it for Joe Biden, which is exciting. Yeah. Joe Biden's called it for himself. Kamala Harris has called it for Joe Biden. A lot of leaders around the world have also called it for Joe Biden. The only person I think that hasn't called it for Joe Biden is Donald Trump. It's kind of funny. So yes, Donald Trump refuses to concede. He's spent the last few days tweeting as he plays golf. And that's actually not an exaggeration. That's literally what he's done. He has played golf all day and he has been tweeting while he's done it.
What a life.
Which is pretty funny. Yeah, what a life. He's fired his, defense secretary. See you later.
Wow.
Yep. I don't know what sort of impact that has, but people are fearing that he's just going to go on a firing spree in anger. But no, there does look to be some more clarity this week than what we had last week. It does definitely look like Joe Biden is going to be the next president of the United States, which is very interesting. However, Donald Trump, he's still pushing for legal action. So I looked it up. The majority of the Trump campaign's lawsuits were filed in Pennsylvania, Nevada, Georgia, and Michigan.
Right.
So they're the states where either Biden's margin of victory is relatively slim or where a winner is yet to be called. Yeah. Which is kind of interesting.
I mean, that's the thing, right? If it came down to just one state and it was a few hundred votes or maybe a couple thousand votes difference, then I absolutely understand.
Pressure would be on then.
Yeah, like I would want them to recount and make sure everything was done by the book in that state. The thing that's challenging for Trump's case here, I think, is that it's not just one state that he needs to turn over. He needs to turn over a number of them.
Yeah, it's like 3 or 4.
It's like 3 or 4. And in a couple of those states, the margin for votes it's small, but it's like 30, 50,000 votes, which is a lot of votes.
And I think I was reading somewhere that the last time they did like all these recounts in a particular state, it changed the vote count by 100.
Yeah.
I think.
Yeah.
Or around about there.
Yeah, that was
time?
in 2000, I think. I think it was Al Gore and Bush, I think it was, when it was very, very close. And when they do recounts, it's not uncommon for it to move, a couple hundred, I think. And that kind of makes sense.
Yeah, there are inevitable mistakes,
of course,
definitely.
But for it to move 20, 30,000 votes would require probably some level of fraud, someone actually trying to change the results. So, yeah.
You know what I found interesting?
Yeah.
Is that even Fox News is cutting off what they're saying about this widespread voter fraud.
Yeah.
I mean, I would have thought that, Fox News is in it to the end with Donald Trump. Like I would have thought let's just keep going. Why not? Let's just keep pushing his case. But I mean, the other day, was it, what's that lady's name? I can't even remember. Kaylee someone? What's her, I can't remember, but the person, is it the press secretary? Is that the person that stands up and talks to the press on the president's bar? Yeah, she started saying something like, it's very important the legal votes are counted, but more importantly, the illegal votes are not counted and blah. And then Fox News just cuts her off and goes, whoa. The presenter's like, whoa, we need to stop. We need to stop there. They're talking about something that hasn't been proven. And I was like, holy moly, Fox News? Fox News cutting off, Trump conspiracies? Are you serious? That's unreal.
Yeah.
It's unheard of.
I think Fox News, they're probably just trying to distance themselves from the Trump administration at this point.
At this point, yeah.
Yeah. It's
You're probably right.
Yeah, I mean, it's strange that they were one of the first media outlets to call Arizona for Biden, and it was still very, very up in the air. There's some speculation that it was a bit of a middle finger to the Trump administration making that call, but.
Or it could be the other way around. They could call states early for Biden to try and rile up the Trump crowd more. I mean, you could argue it's kind of like a reverse psychology kind of thing.
Yeah, exactly.
Potential, I don't know. That's just a thought that I had. I've got just an idea.
No, it could definitely be the case. But yeah, it's strange. I wonder how long this kind of charade will go on for. Because who knows? Who knows? Because Trump's still president for 2 more months, so he can assert some force in that 2 months. So
he could really spit the dummy.
Yeah, we'll kind of see what he does, but he still has a lot of power for a long time. It's not as if
I think it's January the 20th or something like that.
Yeah,
where it officially switches over.
Yeah,
I think
so.
But I'll tell you what I really like to see is that even though Joe Biden, he's not going to be president for another couple of months. I mean, straight away, literally like the day after they called the election for Biden, he was like, right, we're getting to work. And he did straight away. He announced his coronavirus task force, and he had some conference with a lot of top health professionals around the country and researchers and advisors. And he put together this coronavirus task force that they're going to try and, salvage what they can out of the United States and try and heal it as much as possible. But I mean, it's good. Even I think it was yesterday, he held a press conference and talked about his intentions to, how he's going to try and save the Affordable Care Act. I don't know. It's just nice. Whereas I feel like Donald Trump, he goes and plays golf, whereas now that Biden's coming in, he's like, right, we got a lot of work to do. Let's just get on with it.
Yeah.
And I don't know, just listening to some of the press conferences, Joe Biden, he's talking with such confidence now, and it's just nice to listen to someone that's, well informed, and he's speaking the truth, and he's talking about, coming together and the United States being unified and trying to do this and do that to help each other out, as opposed to what we've been hearing the last 4 years, which is just trying to just Trump stirring the pot, trying to promote division over unity. So I don't know. It's when I listened to Joe Biden's speech where his winning speech, I guess, it was just so refreshing to hear those kind of words coming out of an American politician's mouth.
Yeah,
just a little bit of sense,
Yeah, and I mean, it'll be very interesting to see kind of what happens over the next 4 years. I think. I think a lot of people in 2016 thought Trump would do so many things wrong, and I think just that he would mess up a lot of things. And I mean, maybe there's some specific cases you could point to, but looking at the US overall, it wasn't as if it blew up. So I guess we'll see what Biden does over the next few months. I wonder what they'll do in terms of coronavirus, because they're at 100,000 cases a day now. Like, do they even go into a lockdown? Can you even come back from that?
I think what I was listening to, it's just going to be a big plan of just like the vaccine stuff, but also just trying to promote mask wearing and that sort of thing.
Yeah.
Because, I'm not sure whether they're going to be able to lock everything down without some severe penalty, like economic penalties.
Yeah.
I mean, people have already been umming and ahhing and lockdown, not lockdown for like the past however many months. So it's probably going to be hard to really tighten the screws on them again, I guess.
Yeah. They could just do something like mandatory masks or something in public spaces.
Yeah. I think that's what's going to happen.
I don't know. Like, even something like that might have somewhat of an impact, but then 100,000 cases a day, like, I don't know. I don't know how you come back from that.
Yeah. Anyway, we should keep talking about the coronavirus because there's some interesting stuff about the Pfizer vaccine. But before, I just wanted to bring this up because this is hilarious. I found this the other day. Have you seen loser.com?
I saw it from your Facebook post.
From my Facebook post. If you're interested, just open up a new tab right now and just type in www.loser.com. And see what comes up and enjoy. You're welcome. Anyway, let's move on. More coronavirus stuff. Let's talk about this vaccine. There's been some big vaccine news recently.
Yes, Pfizer. Pfizer is the first company to release their results, or their interim results, I should say, for their stage 3 trials. So these vaccines go through 3 stages, the last being a mass human trial, and that's where they kind of try and detect some of the effectiveness of the drug, and Pfizer being the first company. So the headline really out of this is that their stage 3 vaccine looks as though it's 90% effective against COVID-19, according to the initial data that they've released from that stage. So
that's very promising.
90% is good. So that looks really
better
good.
Than 20%.
Yeah, well, I mean, certainly.
I would take a vaccine that was 90% effective.
Yeah, and I mean, we don't know that. We don't have that much information out of it yet, but there was another vaccine in stage 3 that was effective, but the dose was so high, and I can't remember which company this was, but the dose that was required was so high that it resulted in significant like arm pains for like most people taking it.
Ooh,
so
bugger.
I don't know if we'll find out things, those kind of side effects about the Pfizer drug, but this is kind of what information we've got so far. But the vaccine requires 2 doses that are 3 weeks apart. So it's a 2-dose vaccine. And the stage 3 trials started in July and had 43,000 participants. So really big study. And I think half of those take a placebo and then half of them take the actual vaccine. And then basically in the trial, there was 94 patients that contracted COVID. And it's from those patients that contracted COVID that they're able to figure out what is the effectiveness of the vaccine. This is according to, I was just reading through ABC's report about understanding these results. And apparently a 90% effectiveness basically means if 10 people were to take the vaccine and got exposed to COVID, that 9 of them would not get sick, which is what you would expect from that. But I think it's important to note that these are just interim results. The trial is still going. So the stage 3 isn't finished yet. These are just some of the early results that we're seeing. So we'll have to wait a little while for the full results to still come out.
However, promising, right?
Very, very promising.
So fingers crossed.
Yeah. Pfizer's the first company to release data from a stage 3 trial. So there's currently 11, I saw, vaccines that are in stage 3, and Pfizer's the leader at the moment.
And there are there's like 3 or 4 big ones, right? There's Pfizer, Moderna, Johnson & Johnson. Am I forgetting one? No, I can't remember. But I think they're like the big 3, aren't they?
Yeah, there's one from Oxford in the UK.
Okay, right.
That one, they stopped. That was the one I was talking about where they stopped because of an illness, and then the US participants pulled out. But the European participants continued. So that's a strange one. I don't know too much about that, but yeah, it's very complicated. And the other thing to mention is that we're still a long way from manufacturing and distributing billions of doses that are required, because it's not just...
That's the thing.
And it's 2 doses per person. So you need to produce twice as many doses.
And that's the thing as well. When you listen to people like Elon Musk, he always says, it's quite straightforward to make, a prototype of something. But then actually moving forward and manufacturing that thing, like in large quantities or en masse, that's where it gets really difficult.
Yeah.
So I think that, while I don't know, obviously he's talking about like manufacturing, like cars and whatnot, but I can imagine that the same principles would apply to anything, really. So I would imagine that, yes, while it's okay and they can engineer a vaccine for a coronavirus, actually getting it to a point where it's in mass, being mass produced, that might be quite a difficult thing to do.
Yeah. Well, I mean, you would imagine that. I mean, prior to the pandemic, these pharmaceutical companies have the manufacturing capacity that's required to supply just the normal number of drugs and vaccines that on any given year. And then you have this pandemic, which immediately you now have a substantial increase in demand for manufacturing, and they just in some cases they have to build the factories, especially in third world countries. That's what Bill Gates is working on funding, just building the centers just so that they can make them.
Right.
And then of course just sort of I guess like not licensing, but kind of like leasing the facilities of other companies to use their facilities. But in terms of the distribution, so if it does get FDA approval, the US will apparently take 20 million doses a month. So that means that they can vaccine 10 million people per month. Vaccinate. And apparently they have a contract for 100 million doses from Pfizer and an option to add an extra 500 million. So that's the US's situation. And then Australia also has a deal with Pfizer to take 10 million doses, which would, of course, vaccinate 5 million people.
Yeah, it makes sense. And I think especially listening to what Joe Biden was saying recently, it sounds like the way that the vaccine's going to happen is that us plebs that are at low risk will be the last people to get it. It seems like it's definitely going to be rolled out to people that are in high risk categories, which is totally fair. Totally
absolutely
fair.
Elderly and people in where their work requires them to be near other people.
Exactly. Nurses, doctors, people with pre-existing medical conditions, the elderly, all those people, totally fair. So it could still be a fair while before, most of us, generally speaking, younger, healthy, Australians actually get our chance to have a vaccine. So
yeah, absolutely. According to that ABC report as well, assuming that the Pfizer vaccine is approved, which at this point we still don't even know if that's going to happen, but assuming the fastest timeline, apparently all Australians who wanted to get vaccinated would be by the end of 2021. So still a very long way before we'd reached complete herd immunity. But if this is approved, then you could imagine people starting to get the vaccine in the next few months.
The thing I was thinking about with all this, now that we are really starting to think about vaccines for coronavirus, is Is this going to, like, if you get your 2 shots across 3 weeks and then you've basically got immunity from coronavirus, I don't know whether that's forever, but like for a decent while, what's going to happen? Are you like immediately just going to be allowed to jump on a plane and, fly wherever you want and, go on the holidays that you were looking to go on? I mean, I was wondering, is it worthwhile to create, like a United Nations certificate of vaccination for coronavirus or something, or it's like a stamp in your passport or something that they add, which just allows you can just flash it, be like, nope, it's all good. I've got my vaccination. I can go to the United States or something. Because I feel like actually something like that, while it seems a little bit funny and a little bit silly, it could actually be quite useful in trying to get, getting people traveling and getting, tourism back. Because I imagine that if you have this vaccine, the double shot, then you would be fine, right?
Yeah,
it's kind of like some of the vaccines that you're advised to get before you go traveling around like certain parts of Africa or something.
Yeah,
but it's like as soon as you get your vaccines and you've done your test, then it's like it's updated your medical record and then you can go.
Yeah, they may very well do that.
So I wonder if they're going to do something similar.
Yeah, they may very well do that. I would think it's probably more likely that they reduce restrictions based on kind of the percentage of the population that have it rather than excluding people who don't get it. I would that would be my perception. I would imagine that rather than, the vaccine being a gateway, but maybe that's the case. It could very well be. But it's rather that, people are allowed to go on international flights or come to Australia, given that country has 90% of its population vaccinated. I think that's probably... Yeah,
because otherwise that'd create a big political debacle, wouldn't it?
Yeah, that's what I'm thinking. There's a lot of, debate about that. And there's a significant amount of people who don't vaccinate. And you can still achieve herd immunity with 90%, 95% of the population vaccinated. So... I would imagine it goes that way, but maybe we will see that for some things in the short term until that's even possible to get 90% plus of people vaccinated. Maybe that will be the case. Maybe you do have some kind of certification.
Who knows?
Who knows?
Anyway, tell me about the impact on the markets. I would imagine that Pfizer stock went up a lot on this news.
You would be correct. Yes. So, so it had a very interesting impact on the markets. I didn't really think about it too much, but it did have an impact on a lot of businesses in different ways. So Pfizer stock, of course, was up 15% on the day, and then throughout the week it kind of settled a little bit further down. So up 6% from pre-announcement. But then I think more interestingly, there was kind of two different camps that businesses fit into, and half of them went up and half of them went down. So you had businesses that were most impacted by the pandemic go up a lot. So just a couple of areas that I noticed, because I have investments in these areas, restaurants were up a lot. So the Cheesecake Factory was up 23%. Which is crazy. Jeez. Texas Roadhouse was up 16%. So that was just two that I looked at. Travel companies as well. Corporate Travel Management was up 16%. It's an Australian company. And then I just picked out a random airline. Southwest in the US was up 16%. So you saw that all of the struggling pandemic businesses really kicked after that came out. And then on the other side of it, and I didn't really expect this, you had industries that benefited from the pandemic decline significantly. I expected the upside for really hurt businesses, but I didn't expect that there would be businesses like Facebook, for example, which was down 6% on the news because they had benefited from the pandemic. Netflix was down 10%. Even things like the RV industry, which saw their biggest sales in the history of the company in the history of the industry in July, because a lot of US people were getting RVs to travel domestically rather than internationally.
Because they couldn't fly.
Yes. And Thor Industries, for example, was down 10% on the news. So you really saw this really interesting divergence of some businesses doing really well and other businesses doing really poorly. But overall, the markets were up on the news, which you would expect. So nothing too overly surprising, I think, there. But yeah, very interesting.
Yeah, that is interesting. Yeah.
Did you notice any substantial moves in anything you hold?
Oh, look, to be honest, I haven't been following what's been happening very closely in the markets. So I haven't really noticed too much, but I find that very interesting. That it kind of makes sense actually now that you kind of explain it. Big jumps for some of those restaurants though.
I know, 23%, the Cheesecake Factory. Wow. Yeah. They must...
Is the Cheesecake Factory like the same in the States as what it is here in Australia?
I don't think we...
Or is it more like a restaurant?
Well, I don't think we have a Cheesecake Factory here in Australia.
Oh, right. Oh, we've got shops.
It is a restaurant. They do sell cheesecake. But
we've got a cheesecake. Oh, maybe it's not called Cheesecake Factory.
Cheesecake
maybe
Shop
it's called
or something.
Oh,
maybe
is that what it is?
Yeah. Two different companies.
Right.
Yeah.
I see. There you go.
Yeah.
Well, that explains why. That explains my point anyway. Very cool. Do you want to move on? Talk about something else?
Yes.
Leave the coronavirus behind. Get our vaccines and leave it in the dust. We talk about Warren Buffett.
Yes, let's do it. What has Buffett been doing this week?
Big boy Buffett. He's been doing a lot actually.
Oh.
He's been sinking some of Berkshire's cash into the market, which is interesting. So this is coming after on Saturday, Berkshire's Q3 earnings were announced. And in that document, it was revealed that in the third quarter, Warren Buffett bought back $9 billion of his own stock, of Berkshire stock. And that's quite substantial. Like I know Buffett's got like, what is it, 140 something billion dollars of cash. In fact, it's 146 billion dollars of cash. So it's 9 billion, like it's not the largest chunk, but I mean, it's still substantial. It's
huge.
So yeah, and the thing that jumped out to me is that, you know how we've seen over the past few years that a lot of CEOs and management teams have been approving these boards have been approving these buyback programs, but they've basically been approving fat buybacks, which always benefit shareholders, but they've been essentially approving them just at any price. It's just like, it's just like, okay, whether the stock is at $50, $100 or $5,000, you can keep buying back X dollars worth of stock. And Warren Buffett doesn't really think like that. He said he's gone on record as early as recently, I should say, as the Berkshire annual meeting, which was in early May, saying that with his buybacks, you know, he only does buybacks if the stock is undervalued.
Yeah,
like if the stock is fairly valued or overvalued, he's never doing buybacks. He's just going to keep the cash because that's the smartest thing to do. So, and he's always held this viewpoint. So when Warren Buffett comes in and does share buybacks, you can absolutely bet that he believes that Berkshire's stock is undervalued. And by him buying that stock back, he is giving a big benefit to the continuing shareholders.
Yeah. And I mean, it makes complete sense. Like if a company is buying back stock, I think of it as very similar to if you had just bought more shares. Like if you buy more shares personally, the cash in your bank account goes down and you have a higher percentage ownership in the company. And if the company buys back its own stock, the company's cash goes down, which in my eyes, I kind of see it one in the same. Like if you're a part owner, the company's cash is yours, even though you can't decide where to put it. So the company's cash goes down, and because they buy back stock, your percentage ownership goes up. So when you're buying a stock, if you want to buy stock and have a bigger piece of ownership, you want that piece of ownership that you're adding to deliver you good long-term returns. And the same thing should apply to companies doing share repurchases. So I think it makes perfect logical sense to not just be constantly buying back stock because you have nothing to do with that cash. But
yeah, that's what Warren Buffett says. He always says, look, imagine, you know, if we do $9 billion buyback, imagine that's just us investing in something. So imagine that it's not us buying our own stock. Imagine it's us spending $9 billion to buy, you know, another stock. Say we're spending $9 billion to buy like Facebook stock. In that case, then that makes a lot more sense. Obviously, you wouldn't want to just spend $9 billion on Facebook stock at any price because you could be severely overpaying. So it's a good little trick when you just got to think about buybacks. They're just making an investment. they're just buying stock. It just happens to be their own stock. But think about it. They're buying another company's stock. You want them to buy the stock cheap so that they get a good deal for it. So, yeah. So I find that very interesting. It's a good way, Warren Buffett says, it's a good way to think about buybacks. But yeah, Berkshire's Q3, so they bought back $9 billion of their own stock. And that's because he actually got asked why, this is back in the shareholder meeting, why he didn't do more buybacks when after the March crash where Berkshire stock, I think dropped like 35% or something like that. And at the time, this is maybe a month after the shareholder meeting was maybe a month after the crash. And Buffett at the time, he just went on the defensive saying that, look, we honestly just didn't have enough time to buy back very much stock because it was within 2 weeks after that market crash that Berkshire stock had bounced like 20%.
Right.
So he went on the defensive saying, look, we probably would have bought back more stock, but because we're so big and we're trying to buy billions, we need time. We need time to be able to buy back our stock so that we don't, artificially spike our own share price.
Yeah. And I mean, if you've lived your whole life buying stocks and whenever there's been a crash, most of the time that crash has lasted for, at least months that it's the stock price, that the stock market goes down.
Yeah.
And then you have this crash where it literally lasted like 2 weeks and then it was straight back up. It's not overly surprising that a lot of investors were a little bit slow. I would imagine, obviously part of it is probably that he couldn't put enough money into it, but another part of it may just be that he was expecting that it wouldn't be 2 weeks, that this pandemic would cause the markets to be down now, even maybe further than in March, and that he would have that period of time to continue to buy like he has in all the past recessions. So it's an interesting circumstance. I'm still kind of, I don't know. I don't really know what to think about the fact that the market is at all-time highs, and we only are just finding out that we maybe have a vaccine that can end this. So,
it's all a bit up in the air at the moment, isn't it? But yeah, since that market crash after the Berkshire annual meeting, the share price of Berkshire Hathaway has kind of at some stages returned back down to those very cheap prices, which has given him more time to be able to sink more money into buybacks. I mean, I think he's actually quite bullish on his own company because last quarter was the second highest buybacks in Berkshire history at 5.1 billion. Yeah. And now this quarter is the highest at 9 billion. And he's continued by, even as the share price has started going up, he has continued to buy back his own stock, which is interesting. So I think there's definitely, no, this doesn't mean that we should be out there quickly buying Berkshire stock, but what it does tell you, if you're someone that knows about Berkshire and you've got Berkshire on your watch list, it gives you that nugget of information where it tells you what share price range Warren Buffett believes Berkshire to be significantly undervalued. I think that's the main takeaway.
That is true. Yeah, definitely.
It gives you a little bit of an insight into what Buffett thinks.
Yeah, kind of in the same way that whenever he's buying any stock, it can give you quite a good insight into what a really good investor thinks about a business. Like when he was buying Apple in 2015, could have been a really good insight into the fact that maybe Apple was a bargain at that time. But yeah.
So also out of the Q3 report, they, on top of the $9 billion of Berkshire stock, they also purchased $4.8 billion of other stocks, which will be interesting to follow. And in fact, we'll get that information very shortly. In fact, it may even be out by the time this podcast goes live, because Berkshire's 13F should be coming out in a couple of days, which will detail what stocks they bought and sold in the quarter. So we'll have to keep an eye on that. But one of the interesting things that I saw out of this is that, Buffett, he buys $4.8 billion of stocks. He sinks $9 billion into share repurchases. And at the end of the quarter, Berkshire's cash pile went down by only $1 billion. It dropped down to $146 billion. It shows you how strong, it's a crazy company. If they can do $9 billion of repurchases and they can buy $4.8 billion of stocks and their cash pile doesn't even move, that's insane.
It's crazy. They've just gotten so big to the point where there's they're really struggling to find things to buy, and there's no surprise to anybody.
No.
Yeah.
It's only going to get worse as they continue to get bigger too.
Yeah, you would imagine so.
First world problem though.
What do I do with my $146 billion in cash?
I've got nothing. Yeah, I can't sink my $150 billion into anything. Oh dear.
Oh dear.
Anyway.
There was, I think this week there was 5 people or something that have a net worth over $100 billion now.
Wow.
Yeah, the CEO of Louis Vuitton just passed and is up there with Bezos and Zuckerberg and a couple others. Maybe it's 4.
Wow.
So
that's insane.
Do you remember when was it that the first person passed 100 billion? What, like a year ago? Like
maybe it was Bezos, wasn't it?
Yeah, it must have been Bezos. But what, like 18 months ago at the most?
Yeah,
and now we've got like
recently,
4. It's crazy how
that's insane.
how much those companies have grown.
Yeah. Richest people. Having a look at it.
Yeah, but
Jeff Bezos, Bill Gates, Mark Zuckerberg, and Bernard Arnault. I think that's the Louis Vuitton
correct,
guy.
yes.
Yeah.
Yeah.
There you go.
But yeah, in the next few days, we'll be able to find out more about these big investors and what investments they've made with these 13F filings. Sure, there'll be lots of content for us to create over the next couple of weeks. So you could expect a fair few videos covering some of those big investors over the next couple of weeks.
Yeah, definitely.
On YouTube.
Yep. Yeah, I'll be making a fair few videos. I really like tracking what the big investors are buying and selling. I mean, it's such valuable information. Man, I hope they never change the 13F rules. I hope we always get to see them.
Yeah, it's a strange situation, right? I don't know the specific details, but they haven't changed the minimum required assets for you to publicly file these 13Fs. They haven't changed that in a long time, right? It was something like 30 years. And the reason why we see so many of these investors' filings is because they haven't changed that. And of course, inflation and just wealth in general has increased over that time. So I don't know I hope they don't change it.
No, it's very handy as an investor to be able to watch your investing idols and see exactly what they do. I mean, you don't copy them or you don't follow them blindly into or out of investments, but it's just handy because it gives you information. It's like, right, okay, Warren Buffett is interested. I know how Warren Buffett invests.
Yeah.
He's buying Apple stock. And he bought a lot of it in the past quarter where the share price ranged from here to here. Why did he do that? And then you can reverse engineer it and you can figure out what he's thinking. That's why 13Fs are so handy.
Yeah, it's brilliant. I love to find out which companies like Warren Buffett is investing in. And then you just look at the company and you know that you're looking at a company that at least meets most of the requirements that we should be looking for. It's never the case that they meet all of them. So you shouldn't be like, okay, this company has a debt to equity ratio of 1.2. We need to find companies with that specifically, but it can give you a good indication of what a good company looks like, which is really good.
Speaking, yeah. All right, shall we move on? Last story for the day.
Yes.
How about a bit of controversy, eh? Oh, let's get stuck into some drama. Let's sink our teeth into some drama, hey? Here's the drama. I'm actually making a video about this at the moment because this is crazy to me.
Yeah.
This seems crazy, but, everyone has their own opinion. YouTubers, people like you and me, Hamish Otter.
What?
We are being paid to promote stocks. To me, that just smells very fishy. I don't think that's a good thing. But essentially, this all kicked off. I think Sven's video kicked things off, didn't it?
Yeah.
And we shouldn't point any fingers or anything like that. But essentially, what's happened is, and we've all gotten this email. Did you get the email as well?
I don't know. I didn't.
Maybe you're left out.
Yeah.
But let's just say a lot of the finance YouTubers, I got this email.
Right.
It's something like, the title is like, what will it take for you to do a 10-minute phone call with me? Which is like, oh my God, that's just so dodge straight off the bat. But anyway, in there it was saying, our clients, we work with clients and what they want you to do is we can sponsor you. And what we want you to do is do a review style vlog explaining to investors the opportunity to invest in our stock. So essentially they just want to pay us to say that their stock's fantastic. And to me, that is just incredibly unethical in my view. But
yeah, well,
I'm interested to hear what do you think? Do you think it's unethical for YouTubers to be paid to promote stocks?
I mean, obviously people get paid to promote businesses all the time. I think promoting a stock is a little bit different, because I mean the entire integrity of the analysis is ruined, right? If you have an incentive, that's a big problem with just the traditional finance industry and analyst reports, is that most of these companies are brokers, so they have an incentive to make you trade regularly. So you'll find a company, even an individual analyst, will write a buy rating for a company, and then a couple months later they'll write a sell rating, because it's in their best interest to make you trade.
True.
And that is, obviously that happens at a much larger scale, but I see them both in the same light, that it's not very ethical. But if you're going to do it, I mean, at least, be upfront that you're being paid to do it. So at least be upfront about it. That's kind of if you were not upfront about it, if you hid it, that you actually were paid and then you did it, not only is that illegal, I think that's very unethical. But
definitely.
Very strange.
Yeah. So I think it's just a word of warning is to just, if you're seeing people do stock reviews, just really watch it, bit of a grain of salt there when you're watching those sort of videos. And definitely the YouTubers should disclose immediately if they're being sponsored. In fact, it should come up in the bottom left-hand side of the screen. It should say includes paid promotion. And they should definitely, if it's sponsored, they do need to disclose that with YouTube, because then YouTube can put that includes paid promotion banner on the video. But yeah, we just got to, I think, unfortunately, I mean, because there's so much money involved in the markets, and like some YouTubers I was seeing, I'm not going to name names here, but some YouTubers I was seeing with like maybe a couple thousand subscribers, they're getting paid like over $5,000 just to do a simple review of a stock, a positive pump up of a stock, which is crazy.
Yeah.
I mean, that's quite a lot of money for someone. I mean, even for someone that's, got maybe 5,000 subscribers, 10,000 subscribers. I mean, imagine if we scaled that number up to a finance YouTuber with a couple of 100,000 subscribers. I mean, we're talking like potentially nearing $100,000 potentially as a sponsorship agreement to pump a stock, which is just crazy.
Yeah. And I mean, the problem with the finance sort of sector on YouTube at the moment is that it is getting very, very competitive at the bottom. That's true. Just kind of, it makes it very, it's very attractive then if you're a very small YouTuber to take any option you can to either make some more money or to get views. Like you see that most very small YouTube channels at the moment in finance, like all the content they're pushing out is stocks to buy. And that's because that content is like the most demanded content. I don't think it's the most ethical kind of content you can create. I don't think there's particularly anything wrong with it. But there's certainly better financial content, I think, like helping people to make their own decisions rather than instructing them, or not really, but basically telling,
suggesting.
I mean, like, oh, don't follow me, but here's 3 stocks that you should buy. And
do
it's in
not
the title.
buy what I'm buying.
Yeah.
But having said that, here's one stock that I'm really bullish on, and I'm buying thousands of it today.
Yeah, I think that's like, probably the thing that makes me the most sad, is that those videos are the very top viewed videos. Videos where people just basically instruct you what to buy. That kind of makes me disappointed. I obviously it's no surprise, but I wish that more educational content got more views, just sort of talking about financials and that sort of thing. But of course it's not going to.
It's very sad. And that is a trend that I have seen for a very long time. It's very unfortunate, but it's just the way it is. People surprisingly don't actually want to learn about the stock market. They don't want to learn to invest. They just want to be told what to do. Which I don't believe is right, but that's just the way it is. And I've seen it in my content in the past when I've made, videos on specific companies. I don't really do that anymore just because it even though we put up disclaimers and we say, look, seriously, don't buy this stock just because we're talking about it. People still do. So we don't really, I don't really make any of that content anymore. But it's very sad. Yeah. Very sad that people, they just want to be told what to do. And some YouTubers prey on that and they just pump content down their throat because it gets them clicks. They don't care that they're going to go and buy $100,000 worth of this stock and could potentially lose it all.
Yeah.
They just see dollar signs.
That's another big problem. I mean, not even just this kind of thing around companies paying people to make YouTube videos, but if you have a really big channel and you're getting a lot of views and you talk about a really small company, you can make it move. And I hadn't really thought about this up until the past couple of weeks. But if there's a company that has a lot of businesses on the market have trading volume of 100,000, 200,000, that's not a lot. If you're talking about, someone creating a video saying they invested in that company, and then you see the volume go from a couple 100,000 to a couple million, that it really wouldn't take that many people buying the stock after that video for it to do that and triple the value of the stock.
Should we talk about this example specifically?
Yeah, I mean, obviously
it's just an example. Like we aren't pointing the finger here, but it's just an example.
Yeah.
Essentially, what we saw is that one of these stocks that was in this email that all of the investors got was a very good food company. And one of the finance YouTubers, Jeremy from the Financial Education channel, he made a video about the very good food company. Now, in that video, I think he made a couple of videos, didn't he?
Yeah, he made 3 videos. The first one, he didn't mention the company and he blurred it out, but he gave the price that he bought it at and the day. And the first letter of the name of the company was not blurred by mistake or on purpose. I don't know, but you could tell that it was that company.
Yeah, and so he made these videos, but when you watch them, it didn't come up with any sponsorship disclosure or anything like that.
No.
So I give him the benefit of the doubt, definitely. If he didn't disclose, if he didn't disclose that it was sponsored, I genuinely believe that it wouldn't have been sponsored. However, one trick that I suppose you can do, which is what you're just talking about, is if you're looking at some micro cap company or small cap company that has very low trading volume, then you can, form a position over a couple of days. And then just by the fact that you're giving it exposure and you're talking about it in a positive light, you can generate a lot of people to, buy into that stock. And, I'm not sure, maybe you've got more specific numbers on this, but what happens is essentially if you bought in, made your position, and then you've got this big audience and you can make a lot of videos and you can get a lot of people chit-chattering about the stock and potentially buying it. You can actually stimulate a rise in the daily volume. Then that substantial rise in the daily volume can spike the share price because that would just cause a whole lot of buying pressure, which is completely abnormal for the normal trading volume. So the volume spikes and everyone's trying to buy, and that just spikes the share price. Like it really spikes the share price. And you can see that happening specifically in this stock. Did you want to talk more about that?
Yeah, and I mean, everything I'm about to say is pure speculation. So just take everything with a grain of salt. But I think I probably agree with you that I think if he didn't say it was sponsored in the video, I'll take his word for it. And I think what's probably more likely is during that week before he made his video, there was a lot of people who were paid to talk about it, and there was a lot of small channels talking about it. I think what's probably more likely is he looks at where the views are and he makes videos based on that. That would be my speculation. Obviously, I don't even know if that's true, but that would be
it makes sense.
Would be my speculation. There's a lot of stocks out there. The fact that he talks about one that was just mentioned in like 50 different channels' videos,
which have now all been deleted. Have you seen that? Everyone's just backtracking. And they're like, whoop, we don't want anything to do with this anymore.
Yeah, and I mean, Jeremy made a video like talking about Sven's video that because he was mentioned in Sven's video, and he kept going about it being, allegedly YouTubers were paid. It's not allegedly at this point. The people admitted that it was, and some of them just had the sponsored thing in the video. Like they were just upfront about it. They just said, I got paid to do this interview and to do this review. Yeah. So it's not allegedly, like it happened. So, definitely. But yeah, I mean, it's kind of crazy how much the stock moved, because if you look at the stock chart, it was basically flat since its IPO, which was in June. It went on the market. It was basically flat at 125 million for the whole company. That is a market cap. And then it started to move a little bit before Jeremy's video. So there's no real way to see if, his videos caused this move or whether there was something else going on at the same time. But the stock's now within, a couple of weeks at 330 million, which is well over double in the space of that time. And like I said, the volume went from a couple 100,000 to like 8 million. And Jeremy's combined videos had over 200,000 views. So it would not be a stretch to suggest that not just Jeremy's video, but the combination of all of the people talking about this company on YouTube, it would not be a stretch to say that influenced the stock to move. So
yeah, definitely. No, it's insane.
It's crazy.
Yeah. Yep. That's it's a worry. But just going back to that fact that if you're seeing someone do some sort of review and it seems very positive, particularly on a small stock, a small market cap stock, just be skeptical. Just be real skeptical. Because we can't, like what you just see here, you can influence the trading volume. People can make positions. It's called the pump and dump, which is a funny name, but it's essentially where you make a position, you pump the stock as much as you can, you talk positively about it, and then you cause a rise in the share price, and then you dump the shares for a profit. And I think technically, if you get found out, I'm pretty sure that is illegal. Yeah, basically everywhere. I don't think there's anywhere where pumping and dumping is not illegal.
No, it's a big part of what happened to Jordan Belfort in the story of the Wolf of Wall Street.
Exactly right.
He was buying the shares and then getting a bunch of brokers to get on the phones and promote it, and then he sold it.
Exactly right.
Which is exactly So very, very, very interesting situation. The other thing is this company is not a good investment. And I think that's why Sven's video, you should definitely go check out Sven Karlin's video. It was very, very good. I mean, in the video, he talks about the company made $1 million in revenue in a quarter and then lost $2 million. And Sven's like, I can turn 2 million into 1 million.
Watch me do it.
Can I have a company worth $330 million? I'm sure anybody can turn 2 million into 1 million. It's not,
very
it's not
easily.
overly difficult. So
I got a couple of things I'd like to buy. I could quite easily turn 2 million into 1.
Oh dear.
Anyway. Oh dear. The world of YouTube. The world of YouTube
continues to evolve in very different ways than I imagined. So
yeah, who would have thought? Yeah. Anyway. That's that. Let's leave that there. Let's do one. We haven't been able to get to many questions lately because we've been talking so much.
We need to stop.
We need to talk less. Jeez. We need to just be like, cut the crap. We just need to write exactly what's on our Google Doc. Warren Buffett, 9 billion share buyback after Berkshire's Q3 earnings. It was shown that Buffett bought 9 billion of Berkshire stock. Next.
Oh dear.
Anyway, let's do one or two questions, maybe.
Yeah, where should we go?
I don't know. You pick one. I think I picked the one last week. You pick this one.
All right, this question goes, hello guys, have one of you ever been let down by a management decision that led you to sell a stock?
Yes. I don't know if it was a particular decision though, but more just the behavior in general, just the general way that they were conducting business. The most prominent example, like sometimes you really get some snake oil salesmen, don't you, and company management. But the one that stands out to me is this small speculative stock that is actually the only investment that I've made that's just been wiped out completely. That was in Sky and Space Global, which was an interesting company, which I kind of put a little bet on as like just pure speculation way back when. They were this company that's essentially they were trying to do what Starlink is now with SpaceX. So Skyspace Global actually seemed to be a first mover in the space, but they just weren't well funded. So they were very speculative. Anyway, the thing that really annoyed the crap out of me was that the management team, when they announced, market announcements or whatever, they would always hold the tone that, money is not an issue. We've got as much money as we need, and we're going to hit this construction timeline, and we're going to hit this launch timeline, and everything's just going to go smoothly. There was never even like a hint of, look, these are some of the challenges with the funding that we need to work through. They were always just like, you know what? It's all good. Don't worry. We're going to do this by this date. We're going to do that by that date, and you're going to love it. And none of it ever happened because they ran out of money.
Oh, dear.
So, yeah, that was one that frustrated me.
Yeah.
But luckily it was only a speculative. Like if I had made an investment in that, like sunk some real money into it, like what you might do, I don't know, like a Google or a Facebook or something like that. And then the management team started doing that, and then all of a sudden they went bust, then, I would be fuming. But, lucky it was only a bet, but still very annoying. I mean, that actually really taught me. That was the case example that made me learn my lesson about management teams and how they can really screw over a company.
Yeah.
Well, they can screw over shareholders if they're salesmen and not managers, I suppose.
Yeah, you get that a lot in smaller speculative companies, I think. I think it's because the management team kind of needs to drum up the stock to keep the stock price high so that they can get funding. So you see it a lot more in smaller companies where the management team's like, these are our long-term goals. This is what we're going to achieve. And it can be tricky to discern between kind of in some cases it's quite obvious that a CEO is like a sales pitch kind of guy. But I don't think I've ever sold any shares based on a management's decision. I've sold some because I didn't understand them and I got into them too quickly.
Right, okay.
But you see it all the time. I was looking at Lululemon Athletica this week. It's a apparel company in the US, and looking at their quarterly reports, they always reported comparable sales, and then as soon as the pandemic hit, they stopped reporting it and they just stated that it's not relevant. But they were obviously very happy to report their 300% increase in online sales because that's that's relevant. But so I don't like stuff like that where it's just ridiculous. Like none of your results are normal operations, but just still give me the data. Like I still want to see it. But anyway,
that's dodgy AF. Look, we decided not to report our revenue this quarter because we just don't think it's relevant.
Yeah. And I mean, obviously that's true that it's not normal operations, but then you're showing all the positive numbers, like online sales going up 300%. That's not normal. Like, why don't we just remove that as well? But no.
Yeah. They'll like single out one specific store. It's like, Lululemon Philadelphia City store sales were up 500% this quarter. And that's the only one they give.
Yeah, exactly. Pretty much.
Excuse me, what about the other stores? Look, it's really not relevant.
Ridiculous.
Oh dear. Oh, that's so true. We got to watch out for management teams, don't we?
Yeah.
They can really be shady characters sometimes. You hope not, but at the end of the day, some people are just like that. We can't have Warren Buffett every single time. Unfortunately. Man, that'd be nice.
Wouldn't that be?
I want Warren Buffett to write the rule book of being a CEO of a company and how you have to treat your shareholders and what information you have to tell them. And whatever he writes, it goes into the Corporations Act or whatever the equivalent whatever the equivalent is over in the United States. And then they have to follow those rules. That'd be wonderful.
That'd be crazy.
Yeah. Anyway, I think that's it. That's it for today.
Yeah.
What a long podcast in the end.
Yeah, we
ticked over the hour.
Yeah, we had a number of things to talk about. And as always, if you have questions for next week, then head over to the YouTube version of the podcast and leave us your questions on the latest episode. What's the link again? youtube.com/The Young Investors Podcast. I'm positive that's it.
I think so.
But head over there, leave us your questions. If you have news topics or anything you want us to cover, then of course you can do that as well. Thanks Sharesight for sponsoring us as always, and thanks Brandon as always for joining us.
No worries.
And we'll see you guys next week. See you later, guys.
All right. See you guys.